This briefing is for general intelligence purposes and does not constitute professional, financial, or legal advice. Welcome to the SVELTE Global Intelligence Briefing. The global economy is operating under compounding systemic stress. We've entered a conviction cycle, defined by lower deal volume but larger, strategically critical transactions. Surviving this environment requires discarding old baselines. Acquirers must apply entirely new methodologies to price risk and identify targets. This six-panel grid tracks the geopolitical and economic outliers dismantling traditional consensus models. First, the 2026 Iran war and the resulting Strait of Hormuz blockade have pushed Brent crude oil past $114 per barrel. Second, performative Russia-Ukraine ceasefires are accelerating European defense investments. Third, the U.S. trade architecture reset has driven average tariffs on Chinese goods to 33%. Fourth, Beijing is expanding its rare earth export controls. Fifth, internal policy paralysis at the Federal Reserve has locked interest rates at 3.5 to 3.75%. Finally, the IMF projects global growth falling to a recessionary 2%, paired with 6% inflation. These six high-entropy risks interact and amplify one another. Because of this, conventional baseline economic forecasts are overly optimistic and obsolete. China controls 90% of global rare earth processing. Export licensing approval rates for European firms have dropped below 25%, triggering six-fold price spikes. Building independent alternative rare earth supply chains capable of reaching operational scale will take 20 to 30 years. This chart compares standard 3 to 7-year M&A investment horizons against that 30-year construction phase. Acquirers cannot rely on diversification to bridge the gap. They must permanently bake Chinese rare earth cost premiums into their valuation models. Target companies are now exposed to a double compression threat. Rising costs of goods sold occurring alongside severe consumer demand destruction. Adjusting for standard non-recurring items is inadequate here. Dealmakers must utilize full-cycle earnings normalizations. This graph plots three necessary stress test scenarios for oil. M&A deal structures must account for persistent elevation, gradual normalization, and a rapid correction triggered by a potential Iranian regime collapse. Utilizing multi-scenario stress testing is the only methodology that protects deal pricing against binary geopolitical shocks. Acquirers should avoid capital-intensive, consumer-facing targets carrying heavy commodity exposure. This comparison table isolates the required traits for high-conviction targets: asset-light models, recurring revenue streams, diversified geographies, and minimal reliance on Chinese critical minerals. Corporate divestitures of margin-exposed assets will also provide a steady pipeline of actionable deal flow. Prioritizing these structural traits isolates businesses with genuine pricing power, securing durable value despite the broader stagflationary decline. Conviction in this market must be evidence-based. It demands full-cycle normalizations, permanent supply chain premiums, and a strict focus on structural pricing power. This has been a briefing from the Insight Matrix Intelligence Series.
This video is produced by New Corporate Management Proprietary Limited, NCM, under the Insight Matrix brand. It is provided for educational and informational purposes and does not constitute investment advice, financial product advice, or a recommendation to buy, sell, or hold any security or financial product. The Economic Fragility Index Framework, EFI, is designed to describe systemic constraint conditions using structured methodology applied to publicly available data. Nothing in this video should be construed as a guarantee of future outcomes, a market timing signal, or legal, tax, or accounting advice. All probability estimates are subject to the NCM epistemic warrant audit confidence ceiling and are capped at 75% maximum warranted confidence. You must apply independent professional judgment to any strategic or investment decisions informed by this video. All indices used in this video remain the copyright of NCM.